So, everyone, I hope you can hear me now. We just wanted to give a little bit of time for people to join. So today's class will be a bit of practical. And we will combine three things together. We will go into NFP, which is fundamental analysis, coming up tomorrow. We will navigate to commodity trading. Those of us who are on our 1 month training, we are teaching you more on how to trade commodities. Then we will go into risk management because some of you, your class is ending this week. Some of you, your class has ended last week, but we still need to get you to know more. And also, we also want you to understand better. You know what I mean? So we want you to understand better. That is why we are here. So let's just kind of introduce ourselves. I think some people are still struggling to join. I can see many people are struggling to join here. Okay, I think we have to start now because we have a lot to cover. We have a lot to cover. So let's introduce ourselves. We have Brian Marimo. Brian Marimo, can you introduce yourself, please?
Yes, yeah, my name is Brian, from Botswana.
Oh, Botswana, wow. Okay, how's
Yeah,
Botswana
Botswana.
today?
No, it's very cool.
Oh, very cool. Oh, nice. So, how is trading in Botswana? Is it very popular there?
Yeah, I think they need you here.
Oh, I'll find my way there soon. Okay, you're welcome, and we are happy to see you. Oh, okay, yeah, yes, you're allowed to record. Anyone is allowed to record. Anyone who paid for this class is allowed to record. Okay, welcome, Brian. We have had a lot of clients in South Africa, and we have some clients in Kenya as well. But this is our first time of seeing someone connecting to us from Botswana. We have also have clients from Mozambique. So we have Henry. I think I'm familiar with Henry. Henry, good morning.
Good morning. I'm happy to be here.
Okay, yeah. We have Karim. I'm familiar with Karim as well. I will have Osinachi. Karim and Osinachi, good morning as well.
Good morning, everybody.
And yeah, we have Odinaka Samuel. Odinaka, have I met you here before? Okay, probably you are not in a very quiet place. So, Tommy Tobe, I'm familiar with you. Good morning, Tommy Tobe.
Good morning, Mr. Uche. Good morning, everyone.
Good morning. Yeah. So please just make sure that you pay a little bit attention to get a point. Don't pay attention to entire details because you may not understand everything. It could be so broad if you don't have a point to pick. So we are going to discuss first of all fundamental analysis. I'm sure Tomitope, you need more training, to be honest. So that's what I'm feeling in my spirit, that you guys need more training. So we're going to discuss fundamental, but please pay attention. There are some certain things I will teach you that probably you may not have known, or you must have been able to forget them. Even those who are here, don't just skip it. Our major point of teaching today is three things: fundamental analysis with current event coming up tomorrow, which is the non-farm payroll, unemployment rate, and the other this thing, unemployment change. Then how to trade commodities. I don't think Tomitope, you have been on the commodity class. Let me just use you because I'm familiar with your name. I don't know if Brian is with us for a long time. Then we are now discuss risk management. Some of us are not able to understand risk management. It's important that you understand how to manage our risk. And our risk management is practical. It's something we practicalize from the volume, loss size, returns per movement, returns per spread. And also we discuss about margin and the leverage, how you can be able to manage them. Is part of the risk management models you use. Then we also try to use price action to also decide for it. Then, so the most important thing about fundamental analysis is to understand the key fundamentals that is good or that can move the market. The major areas, we just took only 10 of them, which we have discussed before. Out of these 10, one of them is gross domestic product. We have discussed about it before. We have discussed about inflation. We have discussed about interest rate. We have discussed about unemployment and non-farm payroll. We have discussed about central bank policy. We have discussed about trade balance. We have discussed about political instability. We have discussed about consumer price index. Then we have discussed about retail sales. We have discussed about sentiment. Sentiment is not really a forecast, but other ones we're talking about are all forecast. Let me use Tomitope as a case study. Have you been in our fundamental class? Have you gone through this fundamental? Because I'm sure your class, you guys' class are going to end anytime soon. Have you been to FS fundamentals?
Yes.
Okay, perfect. Who else has been our fundamental? I'm sure Usnachi has been to a fundamental class. Odinaka, have you been to our FS fundamental classes? Okay, in case you can't talk, you could just like send a chat, yes or no, so I will know that you could hear me. Now, in all that we have done on FS fundamentals, the link is also on our YouTube. Today's case study will be focused on non-farm payroll and unemployment rate, because we have done some of them. We have to recap more, but focus on non-farm payroll and unemployment rate. It is about change or unemployment rate. It's about job growth. They are indicators of economic health. For example, high employment rates suggest a strong economy in the United States. If there are high employment, which can strengthen currency. So if a country has high level of unemployment, it's a good economic indication that the economy is very strong. And in the United States, this event comes at, they record the employment level every month. And it is being released every first Friday or every first week of the month, mostly first Friday of any new month. Sometimes I've seen where it came out on Thursday. Probably there was a holiday on Friday or something like that. Then it came out earlier before Friday. So the next one is coming up tomorrow, which is very crucial. So non-farm payroll is regarded as a Christmas day for traders because most traders use it to make more profit. Last month on was massive. We made a lot of profit. Osinachi, I think you witnessed last month non-farm payroll. It works perfectly on Euro USD. A lot of us cash out big with it. Now, next one is coming tomorrow. Now, what we want to discuss is how to apply it. Understand? Is how to apply it. I will go back to the chart and show you how to apply it and how you can be able to trade them tomorrow. That's why I said the training is going to be very much raw and very much practical. Please just follow me as I navigate back to the chart and also navigate back to the forest factory where it is being forecasted. So you can be able to see the event and the exact time when it will occur. I'm opening this thing for you now so that we can be able to analyze it together. Please just open your mind up in case you have anything that confuses you. You just object quickly. I will be able to address it so we can move on to the next one. I really need you to understand it because you paid for it. Yes, I hope you can see my new screen now. Can someone see my new screen?
Yes, we can see your screen.
Perfect. Okay, someone say I can see my screen. Perfect. So tomorrow is 6, which is here. Six, which is here. This is the non-farm payroll. In our own time zone, it will be by 1:30 p.m. in our own time zone. As you can see from here, we are on 10:26 a.m. here. Look at me here. Let me change this color to red so you can see what I'm drawing. Here is 10:26. And if you check your own time, it could also be similar time. But if you're in a different time zone, like those of us who connect from China, I don't know, China time, this should be around 4 a.m. now because we have students from China. This should be 4 a.m. now. Or 7 p.m. Sorry, this should be 7 p.m. or 4 p.m. within the China time. So there, you could be able to change the time zone to your own time. And now, the most important thing you must do as a trader is to change the time zone. So you could know the exact time which the event will occur in your own country. Now, in the New York time, non-farm payroll is released by I think 8:30 a.m. in the New York time, which is about 7:30, 1:30 p.m. in my own time. It could be different time in Botswana, I don't know. It could also be different time from those who are connected from Dubai. Yeah, Dubai is about 4 hours different. Dubai is about now will be about 1:30 p.m. Yeah, it should be 1:30 p.m. So tomorrow by 1:30 p.m. we're gonna have major events in Canada and in the United States, non-farm payroll and unemployment change. Now somebody may ask me again, what is unemployment change? So when you go here, you see a brief of how the forest factory described it. You say change in the number of employed people during the past month. And this is just the brief summary of how forest factory described the change in the number of employed people during the past month, then if the actual, which is the current one, is bigger, if it's bigger than what is expected, which is the forecast, it will be good for the currency. Now, if you go here you see how unemployment rate is also described here. It's also a percentage of total workforce that is employed, that is unemployed and actively seeking for employment, which is like changing total number of people who are not employed in Canada. Then if the actual is lesser than expectation, remember, if actual is lesser than expectation, is good, because if there are low level of unemployment in Canada, it means Canada economy is good, doing well, and it will be good for Canada. Remember, we didn't say it will be good for Canada JPY or Canada USD or Canada AUD or AUD, sorry, AUD card or JPP card. It will be good for just Canada. That is the currency. Then here too, we say that the non-farm payroll, which is another one on US dollar. I said I made a video last week that I told you to avoid US card together, because since two of them are going to have a news, you have to avoid them. Then if you go on US dollar, you see that the non-farm payroll talks about changing the number of employed people during the previous month, excluding those in the farming industry. That's what it's called non-farm, those who are not farming. So if actual is greater than the forecast, it means good. That means more people gain job. That's what it means. If there are more people that got employed last month, then it will be good for the currency. Now, look at what they are forecasting here. They are forecasting about 164,000 jobs. So the last month on was last month was 114,000 jobs. They are forecasting 164,000 jobs. So by tomorrow, let me just ask a question. If we see 180,000 jobs, what had happened?
If we see how much?
If by tomorrow, assuming by tomorrow we see 180,000, what has happened?
If we see 130,000 tomorrow, it means the US economy is doing well compared to the actual of the previous month of 114,000. So it means the US dollar is strengthened.
Yeah, perfect. It also means that it's better than what the analyst is expecting. Analyst is expecting 164,000. Now, if you see 180,000 or 200,000, it means it's far better than expectation. So now it means that dollar will be very much strong. So now on unemployment rate on Canada, the last one was minus 2.8 thousand. Now the actual, this unemployment change, so it means more people are going to get job. So they're expecting that 25,000 would be the forecast. So if by tomorrow, if by tomorrow we see like 30,000, what had happened?
It means the Canadian is performing well and the Canadian dollar is strengthened.
Perfect. For my own personal analysis, last month was minus 2.8 thousand. Even if you see 10,000, it means it's better than last month, because last month was on negative. As you can see here, last month was on negative. So if you see much better than what happened last month, it could also be good, because sometimes the forecast or the analysis expectation may be good, may be correct, but the figure will not just be the exact figure. They may have positive report, but probably lesser than what they expected. And that lesser percentage or lesser amount could also be good compared to the previous one. Then if it's higher than what they expected, it also far much better than what they also expected. Now, look at how to apply it. So by tomorrow, exactly by 1:30, we have to come to our chart. I don't know any broker you are using, try to understand how their system works. make sure you use only regulated brokers. It will really help you. Then when you come to your chart here, so when you come to your chart here, what you have to do is this. Remember, the news is on US dollar. You have to look for a pair that is paired with US dollar that obviously is not having a news that same tomorrow. That's why I said avoid Canada, because Canada is having news. If Canada is strong, US dollar is strong, it could conflict your analysis, because FX trading is easily defined as trading strong currency against the weak currency. So if you trade too strong currency, it may conflict your analysis, to be honest. It may conflict it. But the major focus of event on non-farm payroll has always been Euro USD. Let me bring it, Euro USD, because it used to be very much volatile, and it's also the most liquid traded currency globally. The euro and dollar is always the most liquid traded currency. It has more liquidity on it. Now, this is Euro USD. Remember, Euro USD, dollar is the quote, and euro is the base. If what we expect from here, they are already expecting a positive report. Understand where I'm going? They're already expecting a positive report because they're expecting about 164,000 jobs. Then here, Euro USD is very much high. Okay, let me put it on daily chart. I think the price is extremely high, to be honest. It just dropped last week. Okay, yeah. Now, this is the current price of Euro USD, because it broke all resistance 2 weeks ago and went to 1.109. So if the news come out tomorrow to be good for to be above 164, or even if it's above 114, it's most likely going to push the Euro USD down, because dollar will gain strength. Dollar will gain strength. Then we will suggest you should sell Euro USD. That is how to apply it. You sell Euro USD. Do you understand my statement? You sell Euro USD. If the outcome is better, you sell Euro USD. Then we are looking at applying it on US JPY, not on US Canada, because Canada is strong. If they have both strong effect or strong analysis, it may contradict the analysis. On US JPY, US dollar has been very much good, doing perfectly well for a very long time. Suddenly last month, the US JPY crashed against dollar. Now, dollar have not been able to recover, except of recent that we are going to have the news tomorrow on dollar. We are expecting that this news may push the US JPY up to make sure that dollar will rebound back if the non-farm payroll works in favor of US JPY. And technically looking at it, if you have done our support and resistance class, you could believe with me that the price of US JPY is on support zone, is forming support zone. Here is a support zone. And the current market price is here. The current market price is here. There's a very possibility that the price will rise if the news favors dollar. So what I'm trying to let you understand now is, let me call names so that I can draw your attention. That's why I'm calling your name. Abe, Brian, Henry, Odinaka, Ando Sinachi, and other people here. I can't scroll down. What I want you to understand is tomorrow, if you come out on your chart exactly by 1:30 or your own time and discover that non-farm payroll news is higher than 114,000 or higher than 164,000, you could come in here and buy USD JPY and then come on Euro USD and place a sell on Euro USD. But if the news is opposite, if by tomorrow what is being released here by tomorrow is bigger, I mean, what came out to be the outcome of non-farm payroll is lesser than 114,000 or 164,000, far lesser than what they expected. It is bad for the currency. It means that Euro USD may buy more. What you have to do, you place buy, then I set up your stop loss below 1.10971, or you just set up your stop loss anywhere within this point, Then you buy. Do you understand my explanation? You place a buy, set up your stop loss within that area. Here was the one of last month. Here was the non-farm payroll of last month within this point. And you can see that it was massive. This event here was the non-farm payroll of last month here. And we bought it. I'll make a lot of money. Now, let me show you why on here. Let me share another screen with you. Here, I hope you can see my screen. Non-farm payroll. Yeah. So here, you see that the one of July was 206,000. And the one of August look at where I'm analyzing from. And the one of August, they were expecting 176,000 jobs, but what came out was 114,000. Then that was the reason why the market went up. Do you understand? So they were expecting 176,000 jobs as of August. Now actually became 114,000. Then that was one of the reasons why Euro USD went up from here to this point and keep going to this point, because of the unemployment report was very bad to dollar. Then euro become more stronger than dollar. It has continued like that the ending of this month. If by tomorrow what came out to become also become lesser, if by tomorrow, if what came out here become lesser, or if it's far lesser than 114,000, it will be bad for Euro USD. You have to buy more. Then, but if it's better, then you sell more. We are believing that it could be better because of, things can't just be bad almost all the time, and they're doing everything possible to stabilize the dollar. Then on USD/JPY, we place a buy if the report favors dollar. If you receive a higher number of employed people exactly tomorrow, then we place a buy. Now that what is called coherent theory. We are looking for opportunities. Technically, USD/JPY is very low. It has formed a support zone, which is most likely going to rise based on support and resistance, unless if the support is broken. So technically, buying it here is very much good. If by tomorrow we get another news that support dollar, it means we have to buy more because dollar is base here. We have to buy it more. That means we have gotten two coherent theory that we should support our buy. One, okay, I will say three coherent theory. One, the price is very low. Two, is on support zone. Three, there are fundamentals, or there's a fundamental supporting the buy. Then we pull our trigger and place our buy, expect to exist 1.49175. 1.49175. I'm already giving out the analysis. I don't know if you're taking the note. Are you taking the note? Are you taking your observation?
Yes, sir. We are following up.
So
Yes.
if you have any other currency you want to trade it with, I'm scared of Australia. I'm scared of Australia USD because technically Australian USD is not really balanced. Because before we make analysis, we try to join 2 or 3 theories together. But on Euro USD, the Euro USD technically is on has come a resistance point here. Here is a resistance point on Euro USD, and of course here is a small support, but support can be broken anyway. So if the news come out more, this could be a retracement. This bullish could be a retracement. And if you check very well, the market has been on standstill, maybe on standstill today, because event is coming. They want to know what's going to happen. The report is coming. So if the report is good, it means we have to place a sell here and put our stop loss within this price. Or based on your own risk, you can set a stop loss based on your risk. Believe me, you cash out, you make a big amount of profit. I'm scared of us trading it on JPP USD because pounds has been strong against dollar for a long time. So I will technically suggest you avoid trading it on JPP USD, or even if you do, trade it on a short period of time and leave. Pounds is very strong against dollar. This is weekly chart. If I put it on daily, you see that it has performed very much better against dollar for a long time. So avoid any music that has to do with dollar. Avoid trading it together with pounds. You may not gain as much as you expected. Always look for weaker currency to trade it on. Let me check whether it's visible to trade it on USD. Yeah, okay. So Chef USD also presents good opportunity. You may also buy Chef USD. Although it's almost about breaking the support zone. Here is the support, but it has not broken it yet. So there are 2 theories you can consider here. Here is the support zone here. So you could place a buy on this one and sell on Euro USD and buy on USD card. Then that is if the news favors dollar. Then if it didn't favor dollar, it means it may fall down more. But on that note, it's easier to make more money if the news work against dollar. It's easier. If the news works against dollar, it's easier trading it more on Euro USD and JPP USD because they are stronger than dollar. So they may go more further up than what we expected. Any question? Any question before we go into another topic?
Let's say, Brian here from Botswana. I wanted to ask the timing of placing the trades vis-a-vis the list of the news.
Okay, it's a volatile time. Place it exactly when the market, once the news come out, you place it. For example, tomorrow I may be on live, possibly I may not. I don't know how my schedule will be. That's why we have to have this class today, because assuming you are learning it, it could be difficult to explain it to you at the same time why the market is still trending. So that's why we have to explain it today and record it so you can even watch it again in the evening. Now, exactly by 1:30, what's your time there? Is it the same time with us?
I think we are one. I know. I think it's the same. It's the same time. Same time.
Okay, yeah. So exactly by 1 o'clock or 1:15, come here on your Forest Factory or any of the forecast calendar you are using. We use Forest Factory more than other ones. You look at what I used to do when I come here. My focus is not on Canada. It's on dollar. Then I will click here. Then I will click on latest release here. Exactly by 1:30, I'll click on latest release. Or if I don't want to click on lateral release, I will just be here. Then within this point here, it will change to a clockwise something. Like you see a clock symbol, like a wall clock symbol. That will be like rotating. And exactly by 1:30, it will come out. But if you click on latest release exactly by that 1:30 or 1:15, you will see that this information here will be taken away. You see, this page will not display because another information is coming up. It will show something. That's how it will give you another information here that it means they want to update the information. Then under this page, you will see it. But you can read the information here immediately. It came out exactly. If you don't understand it in figure, you can read about it in English. As you can see, the one of last month, you read here that the unemployment rate rose by 4.3%. It means that there was a bit high level of unemployment, which is bad for dollar in July. And non-farm payroll employment age up by 114,000. It means that it's also a very bad one. This report is from the U.S. Bureau of Labor and Statistics. Then unemployment rate, okay, just leave that one. So this is the summary of what you are looking for. On this one, you can understand it in English. If you can't understand it in English, if you can understand it in figure, you just go in here and get the figure. Then immediately go back to your chart and pull your trigger. Because sometimes brokers may also give it, what we call it, make it, give you like a widespread, especially if you are dealing with dealing desk brokers who trade against you. They may widen your spread that time. You know what I mean? So you need to be careful. Or sometimes you could use pending order to trade them. You place an order on pending. Some people like to, people based on uncertainty, they may say, let's just buy and sell. They could buy and sell together. So if the report become positive on dollar, they will close their buy, or they will just deactivate their buy order. If you become positive or negative on dollar, they will activate their buy and deactivate their sell. So make sure exactly by 1:30 you watch out. Then if you are a student, we're always available on chat. We will send you, you will just send us a message on WhatsApp. Do I buy or do I sell? We can give you an order. Do you understand?
Yeah, thank you.
My objective is for you guys to know what it is and how to apply it. It's easier to know it, but applying it is the problem. Have you all understood how to apply it? Assuming tomorrow you open your chart and see a figure, will you know what to do? I just want people to understand that they have understand how to apply it.
No.
Who said no?
Senator said no.
Okay, which area are you confused about?
How to apply everything you said. How to apply it,
okay,
understanding, yeah.
Okay, but now, do you understand what it's all about, the non-farm payroll and unemployment report?
Yes, I do.
So what do you understand about it?
Applying it on the charts and taking trades from it.
No, what do you understand as non-farm payroll? Assume someone asks you, Auntie, what is non-farm payroll?
Okay, those are fundamental analysis. Yeah, those are fundamental analysis that affects the currency of the particular country affected.
No, that shouldn't be the best answer for the person. So you tell the person that is the number of employed people, change the number of employed people in the United States.
Okay.
And change and the percentage of unemployed people in the United States. That is non-farm payroll and unemployment rate. Do you understand?
Okay.
Don't tell the person it's fundamental. So non-farm payroll is like changing the number of people employed, not people that doesn't employ, people that gain job in the United States, apart from those who are working in farming industry. That's why it's called non-farm. Apart from those working in farm, so they are not included. But those working on other sector, like healthcare, maybe different other sector that's not just farm. Anybody that gain job in the United States, the total number of job gained in the United States in the month of August, that is what is called non-farm payroll.
Okay.
Do you understand that one now? Now you now ask
Yes,
yourself,
I do.
okay, let's say now last month own, let me show you here. Last month own was 164,000. Look at it, it's under okay, sorry, actual. It's actual here. Was 174,000. So 114,000 jobs gained in the United States. Now, this forecast, so this is previous, apologies. So this is previous. Previous one was last month. It shows that 114,000 jobs were gained. Then
Yes.
the analyst is expecting 164, like at least a recovery. At least 164,000 jobs should gain. So if by tomorrow the exact number here becomes higher than the last month or higher than what we are expecting, it means the economy is good. That means US economy was good last month. You don't understand?
Yes, I do.
Then, so how you can apply it? You come to your market. Since forex has to do with one person. Since forex trade has to do with one pair against another, so we suggest you trade it on Euro USD, USD CHF, or an USD JPY. That's what we suggest. We are not supporting you using JBP USD because of JBP USD is very strong. So the news may also be stronger on dollar, but it may not have effect on the pair. But on Euro USD, it may have more effect. So on that note, what you have to do is that when you come here, you place sell. If the news favors dollar, if we have higher number of employed people, from what I said now, 114,000. If we have about maybe 165,000 or 180,000, then when you come to Euro USD, you place sell on your platform. You place sell. So because of the news is in favor of dollar, sell here. You know, the platform may be different. So, but if by tomorrow now we see 100,000 jobs or 90,000 jobs, it means it's even far lesser than what was gained in July. It means it's bad for dollar. So Euro USD may go more up because dollar will go weak, Euro will go more strong. Then you have to place a buy here. You know, on your platform, it will not appear like this, but I'm sure you know what is buy and what is sell.
Yes.
I mean, you know, you are buyer. You know why we are buying and sell button on the platform you are using. Do you understand now?
Yes, I do.
But now on USD JPY, because USD JPY dollar is the base here. JPY is the put or counter. As you can see, JPY came second, while dollar came first. So here now we place a buy because dollar is the base. Do you understand? And dollar is strong, so
Yes.
we place a buy. If the news favors dollar, we place a buy. But if it didn't favor dollar, it means dollar will go weak in almost all the currency. And JPY is one of the most liquid paid currency as well. Then it means that their market may fall further. It may come down to 1.41296, sorry, 1.41269 or more further. Do you understand? So because of that, we said since it has already gone so down, you may just focus on it. If the news is not in favor of dollar, you may focus on buying more of JPP US since JPP is stronger this year against dollar. And you also focus more of buying more of Euro US because Euro US is so fiercely strong because since last month, the unemployment rate fell in the United States. I would rather say the unemployment rate rose, it didn't fail, but the employment report came down. Are you still confused?
No, it's clearer now. Thank you.
Okay. So now, do you have any other question? We have spent 1 hour to analyze this particular one, but it's important you know it. That is what training is all about. You can read information on the internet, but application of it is where the training comes in. So we're expecting both ways. We'll be on the chat section to give you update as quick as possible. If I'm opportune, I may also be on the live so that I mean on Zoom Live, anybody can connect and we could trade together. And let's see how tomorrow will be. But it's important that you know it in case nobody is there to assist you. You can quickly grab the information and place the trade. It's easy. Is there anyone confused about this analysis now? This thing can give you a big amount of money tomorrow if it works well. Last month on was massive. We gained a lot of money since last month. You know, the effect of it can last a very long time. Okay, ask a question. Who's asking the question? Abby.
Yeah. Okay, thank you very much. Please, how accurate is this strategy for fundamentals? Like if I put
fundamental control the market.
Order.
Sorry?
Okay, I can hear you.
Fundamental control the market than technical. So non-farm payroll, if you trade on it 12 times in a year, you may have chance of getting 70% of it. So check the previous data of non-farm payroll and the market reaction. It works up to 70% the market because fundamental, it definitely controls the market.
Okay, thank you very much. Thank you very much.
Yeah, there's a video we had, forest fundamentals and how to apply them. If you go on that video and listen and understand it properly, you will know how to apply them, and you make a lot of money for a fundamental trader.
Wow, very
good. Now, I think we have all understood how to trade non-farm payroll tomorrow. So we are going on the second one, which is coming up today. Today, by around 3:30, we are going to oil market. And those of us who are oil traders or commodity traders, is our own day. We're gonna make a lot of money if our analysis work the way we expected. I'm not sure if Tomitope and Co have done commodity trading analysis. If you have done it, you can say hi. If you have not done, you can say no. Then we combine this class together so we can be able to teach you how to trade commodities. I've made my notes. I'll be able to give you some factors that affect commodity market, and they will use the crude oil as a case study because commodity market involve a lot of stuff. Then I will also give you some basic introduction to it. I'm waiting for a response from Tomito, but if you have not done commodity market, so I will know where to start. Then I will show you the practical way to.
I've not done it.
Okay, so I will show you the practical way to trade on it this afternoon, in case you are ready. So that is what we are going to do now. First of all, let me I will just give you a brief introduction of commodity market, what you should expect, Now, if anyone is happy with commodity market, just say hi. Someone send me a message. Okay, someone is saying name. Okay. Please pick a point. Just pick a point. Point is more important than speaking grammar. I'm sharing my slide now. Pick a point. Always make sure you pick a point. Yeah. This is, I'll start from factors that affect commodity market, the crude oil. But on a general note, commodity market talks about commodities like gold, oil, agro commodities, silver, agricultural commodities such as ginger, soya bean, maize, and stuff like that. They are all available to trade. You could trade them on futures, you could trade them on CFDs. That is commodity market. There are factors that affect them. And those factors is what I've listed here. But on the side of crude oil, because I'm an oil trader, so I focus more on it. It is one of the best commodities you can trade ever. It's one of the best because it is the major source of energy across the globe. And there are cartels who are involved in oil and gas market. Almost everyone knows about oil and gas market. The strength of oil determines the strength of currencies. But although it works vice versa, the strength of currency, let's say the United dollar, also can determine the price of dollar, so the price of oil. Now, there's always news on oil market. There's always news. There's always news. You can hardly see where there's no, like now, oil market crashed to $67 per barrel because of speculation that OPEC may not be able to extend production, stuff like that. The news is there. You can see the reason. And it's different from forex market. Forex is pairs, currency trading, and you have to do them on pairs. But oil or commodity market is just a single instrument. So if it's either it's going up or it's coming down. So the news is very much straightforward than forex market. Why did I say so? If you got news on dollar, you need to look for a currency that is weak to trade the news. If you got news on euro, you need to look for a currency that is weak to trade the euro because if euro is strong and pound is strong and you got news on euro and you want to use it against dollar, you may not win because the pounds may be stronger than the euro. But if you got news on commodity, it is the news. If you got news on gold, it's the news. And it's easy to predict, and the people make a lot of money trading oil. Now, you could trade oil on CFD. Take note, I'm giving you the note already. If you trade oil on CFD, you could trade oil on futures. The brokers we use, we trade directly on futures because they connect us to the New York Stock Exchange. We could trade oil on futures. The same platform where you trade oil is also the same platform where you trade other, especially on MT5 platform, which is updated platform that you can even trade ETF on it. Like you can trade oil futures, oil CFD, and oil ETF on it, including gold on it. Then you could even be able to trade delivery and non-delivery aspect of it. You know, you can take delivery of oil if you are on future aspect of it. Then you could also take delivery of it you can take delivery of it if you're on spot trading. Now, there are three major ways which you can trade oil. One of them is one, through futures, two, through spot, three, through derivative. Three major ways you can trade oil. One is through futures, two, through spot, three, through derivative, futures, spot, and derivative. I don't know whether you got that information clearly. I don't know why I keep using Tomitobe. If you get information clearly, just let me know. The only one I get it clearly. Three major ways to trade oil: CFD, futures, and spot. Somebody said, listen with rapt attention. Oh, perfect. So now, there are factors you need to consider. Fundamental factors you need to consider when you're trading this market. Sometimes the difference between CFD and futures is that CFD is contract for difference and it's strictly on non-deliverable. Your settlement is paid in cash. Futures you can take delivery of future market, the futures, and some futures you can trade futures on leverage and non-leverage, but most CFDs are strictly on leverage. Some of them are done through over the counter, but it's very much easy to trade. But since you all know how to buy and sell, that's technical. It's important you know the fundamentals of it so that you can be able to make a sound analysis. One of the factors that affect oil is demand and supply. Remember, it's different. The factor that affects forest is different from the factor that affects commodities. Demand and supply affect oil a lot. Somebody may ask me, what is demand and supply? The quantity of oil available to trade per week or per month, and the quantity of demand, people who want to buy the oil. And there are areas where we can go and get this quantity or this report of demand and supply. One of the areas we could go and get them, or the body, one of the areas we could go and get this demand and supply is through the EIA. EIA. Today is Thursday. Be checking my screen. I'm going to draw something. This is crude oil inventory by 4 p.m. today. 4 p.m. today. It's supposed to come out Wednesday. Probably there was a holiday in the United States, I think. So this is crude oil inventory. And one of the places you could get the information of demand and supply is through Energy Information Administration, which is the EIA. EIA, take note of these things. It will help you, which is EIA. I've told you now the factors that affect oil is demand and supply. But how will you know demand and supply? I mentioned EIA. What is EIA too? EIA means Energy Information Administration. They are like a body, a global regulated body that gives the global market the report of quantity of oil available to trade on weekly basis. Take note. They are a global body responsible to supply the global market the quantity of oil available. You may not get this in forest because many countries will not give you the quantity of capital inflow into their forest, but you can get it through trade balance. We have done the fundamental anyway. From trade balance, you can be able to predict the quantity of cash or forest inflow of a particular forest, of a particular country. Now, exactly by 4:30 today, 4 o'clock today, the report of EIA will come out. If last week on was minus 8 million barrel, 8 million barrel, and they are expecting minus 6.5 million barrel. Yesterday night, the API report was also negative. It's almost like 7 million barrels, something like that, minus 7 million barrel. Another body that is responsible to supply the quantity global is API. The API report more within the United States. The EIA report globally. Can someone just repeat what I just said? Let me be sure you're following. Please, I'm not trying to command you.
You said API reports more within the United States, while the AI reports globally.
Yeah, I mean the previous one I said before the API. Like some of what I'm trying to say. I mean, do you understand EIA? Do you understand API? I mean, the work of EIA now and the work of API.
Yes, the EIA, they bring out like the quantity of oil that is available for the week or thereabout.
Perfect. That is how to know demand and supply. You go to EIA website and get it. But Forest Factory integrates everything. So we could just navigate the website through the factory. You don't understand? Because if you check Forest Factory, you see that all these things are external link. If you click on it, it will take you to where they got the link from.
Wow.
You get what I mean? The only advantage of Forest Factory is that because of time zone, it's easier for they were able to solve the problem where you can just get everything in a particular place instead of browsing different websites or different time zones. You may have risk of mixing the exact time it will happen in your location. Now, some people have done this class, but I have to let people who have not done it to know more. Now, you see that the last week report from the EIA. Trading is easy and simple. You just have to understand it and keep emotion aside. You make money. Then have good capital. I want someone to help me read. Here. Later, I can read out more of it.
Is it from the where you highlighted?
Yeah, perfect.
Inventories, excluding those in the strategic petroleum reserve, decreased by 0.8 million barrels from the previous week.
So, what did you understand, please?
There's a decrease in the barrel produced from the previous week. That's what I understand from it, from the content.
Yeah, so then it means that the supply decrease, there was like a reduction, like which other word can I use to qualify decrease? Like, like shortage of supply. Yes, of 0.8, not even up to 1 point, not even up to 1 million. It has gone to 0.8 million barrel. You understand? From the previous week. Now, today, exactly by 4 p.m., another one will come out and it will replace this one. So, and now they're expecting 0.6. 0 minus 0.8 and minus 0.6. Which one is greater?
Minus 0.6.
Minus 0.6 is higher than 0.8, right? Okay, so but it is still like a negative. Now, let's check the report. We are making it very much conversating, so I'm not like I'm not teaching you like you are in a school. So this is proper trading school where you practicalize everything. So we have to make it like advanced learning. So we have to talk. Yesterday was September, right? September 4th.
Yes.
Here was September 4th. That was yesterday.
Yes.
Now, the API, they reported minus 7.4 million.
That's barrel.
Yeah. Yeah. And what was forecasted was minus 0.7, but we get minus 7. It means more decrease within the API. Because minus 7 is bigger than minus 0.7. Minus 0.9. And the previous one was minus 3. Remember, we are discussing how to get demand and supply. So this is the API. It came out last week. Sorry, last night. Today, the EIA will come out today. The EIA own is more like kind of it moved the market more because the report is more taken into consideration than the one of API. But sometimes you could use it to predict what the EIA report may gives, because most of the time their report like but it will not be the same figure, but it will talk about the same shortage. Do you understand? It's important you know all these things. Now, another factor you need to consider that affects the oil market is geopolitical event. For example, the case happening in Gaza and Israel, the problem in the Middle East is political. It affects the price of oil. These ones, you could get it on news, but pay more attention on demand and supply because it comes out every week and it controls everything. I heard that in Yemen, I'm getting some research. In Yemen, their armed group is bombing a lot of vessels carrying oil. They say they are bomb. Is it up to 5 already? But the news is not carrying down. It's not on mainstream news, but there are some information I got that they actually bomb within the Red Sea and you know the sea area where they are exporting oil. So they are bombing a lot of vessels that are carrying oil. So I don't know how true is that. But yesterday, the price came down. Sometimes the United States plays a very strong politics with oil. In case they want to launch some attack or everything, they want to bring the price down a bit because the higher price, if the price is too high, it could cause inflation in the United States. Now, that is another factor that you need to pay attention to, economic indicator. Someone will ask, economic event, yeah, it's also the sentiment indicator. Someone will ask me, how do I get it? You get it from the news. News like Bloomberg.com, oilprice.com, investing.com, or any other news that talks about oil. Please take note. So you could read it, see what is happening. Then we'll talk about inventory report. Inventory report and supply and demand is the same thing. Inventory talks about the quantity. The crude oil inventory plays a very major role per week. It decides what the market is going to happen. If there are more reports, more supply every week, it can trigger the demand to drop because more supply has been there. Now, currency movement is more important. Now, oil is valued in the United States dollar. So when dollar is too strong, it can affect demand because people who are trading oil from other countries cannot be able to afford dollar to buy. So they like it to when dollar is weak, it's easier for them so they can get more dollar to buy the oil. The strength of currency of United States can affect the price of oil, but it's not in the same proportion with demand and supply or inventory level. Take note of these things, it's very important. Another one that affects it is natural disaster. Natural disasters such as those hurricane issue, war, like where there's the bomb, some things like last 2 or 3 weeks, they bomb the energy area in the Ukraine and the price went up. Natural disaster could be war or some out of nature, which is like hurricane that affect the area of oil production, the oil rig. Go and do an assignment about Baker Hughes oil rig count. Let me drop it with you. Those of us who are our students, Baker Hughes, I may not get Baker Hughes oil rig count, oil rig count. So make sure you do a research on it. It talks about total number of oil rig available globally that is producing. So if anyone shut down, it will reflect on Baker Hughes oil rig count. So if there are more rigs that are producing this week or this month, the price it means there will be more supply or there will be more production. If the major oil rigs dropped, it means there will be lesser production. It can affect. It's mostly affected by natural disaster, and that's what could cause some oil rig to close out, to shut down, or to stop drilling. Then energy transition and regulation. We're talking about the body that is in charge of oil sector, like OPEC. OPEC decisions can affect. For example, OPEC is about to have a meeting on production cut. Please pay attention to it. They are going to have a meeting. So if they agree to cut production more, the price of oil will go up. And they always want to cut production because the more they cut production, the more the price go up because higher oil price is good for those oil producing states because their budgeting and everything is tied to their oil. They want oil price to be high so that they could sell more and make more money. Sentiment and speculation is there, but it's not too strong as much as we have it in currency. Said, speculations. Like why oil came down was mere speculation. You see how it came down very seriously. Yeah, I'll open the chart so that you see how the chart came down. It's merely speculation that that OPEC may, and I think they said they may delay and stuff like that. And one of the major oil company in Libya want to start. So people became, are you sure that won't be this? Then the price came down. That's what the news reported. The major reason. It's not that there's any strong other factor. Just like speculation. Then, of course, technical analysis. So on a summary, what they need to consider most is politics, demand and supply, and natural disaster. They controls every other thing. Politics, demand and supply, and natural disaster. They control every other factors. So once you're able to know them, you could be able to trade oil. Yeah, Becca, thank you. So do assignment on that, Becca Hooch oil recount. So do assignment, do a research on that, Becca Hooch. So do a research on it. Just Google it after this meeting, so you could read more about it. Now, this is the major news you need to focus on: politics, demand and supply, and natural disaster. Now, you could get political news from the market news. I mentioned Bloomberg, oil price, and other oil bodies. They talk. In fact, even your local news can report to you about news. When you hear about war or whatever, strike, like they're expecting that maybe Iran will strike Israel because of what is happening to them. So anything can happen. One, there's any political event, the price of oil will go up or come down. If you understand them, you'll be a very much good in trading oil. Now, let's go back to the chart. I don't know if you have any question here. I'm going back to chart. This is second segment. We are talking about oil. I usually get some information from oilprice.com. You see what I was telling you, one of the reasons why the price came down is here. I hope you can see that oil price plug on OPEC plus production called speculation. Now, the API report came out here. The API report, significant crude oil draw, crushing inventory, significant. This was in line with what we just discussed on investing. Can someone read this for me, please?
Which area?
Let me give it to Tomitobe because I need you to understand this thing. Tomitobe, if you are in a very quiet place, you could read this thing for me.
Okay. If the increase in crude inventions.
Oh, sorry. I click on something that is maybe it could be advert. Yeah. Yeah, go ahead.
I can't say anything. If the increase in crude inventories is more than expected, it implies weaker demand and is bearish for crude prices. The same can be said if a decline in inventories is less than expected. If the increase in crude is less than expected, it implies greater demand and in bullish for crude prices. The same can be said in a decline in inventory is more than expected.
Perfect. So what do you guys understand on that summary?
It means if there is increase in crude inventories, that means crude oil will sell. Let me just put it that way.
Yeah.
But if there's a decrease, crude oil will buy.
Yeah. So now you see that this is not my note. You see where I'm getting it from. So you could see that it's an authentic information. Do you understand? And the source, look at the source. The source is American Petroleum Institute. The source. Source. Look at the source here. They're trying to tell you how it works. And it's easier to analyze it. Now, if by 4 p.m., let me ask Tomito about this question because I wanted to understand it. I'm sorry I'm using her. I can use anybody in case you feel jealous. So, Tomito, if by 4 p.m., they are expecting under forecast 0.6 million barrel. That's what they're expecting, which is relatively higher than minus 0.8. So if by tomorrow, by 4 p.m., you see minus 3 million here, minus 3 million, what had happened?
It has gone down. There is a decrease.
Then on the platform here, where is oil? Where is oil? On the platform here, what will you do?
Then we'll buy.
Perfect. You place a buy. But what of by exactly by 4 p.m. now, we see plus 3 million. Like it's not a negative figure, just like 3 million something.
It's an increase. Then we'll take a sell.
Perfect. That is how to analyze support, supply, and demand. Supply controls demand here. The major demand we have in the world is China, India, I think United States, some other big countries that buys oil. You could get them on the news when they want to buy more. But supply is what you can use to predict what the demand will react to. It's as simple as that. Now, for example, if you come to the news and see on news, let's use the case in the Middle East that let's say Iran, okay, let's say Iran bombed, let's say Iran, okay, let's say America bombed Iran major oil well on the news. What do you think that may happen? What will be the significance of that news?
Supply will drop.
Yes, to cause tension. That's that political tension I mentioned. Because any attack within the oil areas causes tension, and that tension could cause the price to rise. That's why it's fair allowing trader you pay attention to geopolitical events like sanctions, some of these breaking news. For example, there was a day we were trading, and that was the day that the Gaza and Israeli were discussing about peace deal. Later, they agreed, but when the Israelis went back to their country, the prime minister disagreed, then the price of oil went up. Because they could not agree on the peace deal, on a ceasefire deal, then the price go up. That's geopolitical event. Those ones, you could get them from the news. It's easier, it's not too complex. For example, if you hear on the news that Russians shut down oil sales to the European communities because Russia supply the Europe countries their major oil product. You hear on the news that Russia refused to sell oil to the European community. What will be the significance of that news, that particular news?
Prices will likely go up.
Yes, price will likely go up because Russia is one of the major producers and they refuse to sell.
Drop in supply.
Yes, need to go up. If you trade commodities, you pay attention to those things because it's a physical thing. It's not like it's not currency that everybody is controlling that hide it, but it's like cartels. Like that, dealers you need to go and get the information from. The same way, if you trade ginger, maize, and everything, you pay attention to it. There are a lot of things you can make money with. It's not just forex. There are a lot of things you could trade. If you understand how they work, then you focus on them and make money. The same thing with gold. If it is covered by gold mining issue, disrupted and everything, you know that the price of gold will go up. And again, too, when there's serious global economic crisis, gold price rises. If you're a trader of gold, you need to understand them. Because companies, banks and everything, they hedge their product, their currency and whatever with gold in case of these challenges. That was why when the pandemic was in force, gold keep going up because major big players were hedging their asset on gold because gold highly depreciates in price. So if you pay attention to it, you become a very good trader. Don't just pay attention to the chart, pay attention to here. Any question, we're ending this segment on how to trade oil. If you understand it, let me know. If you don't understand it, let come back my attention again. Let's discuss it properly. We are going on the last one. Any question?
Yeah, thank you, sir. My question is on these different brokers. I understand I'm seeing a lot of different types of oil. I'm seeing WTI crude oil. I'm seeing oil blend, UK oil. How are they different? I'm seeing WTI light crude oil spot. The other one is written cash.
The oil is grouped into two major asset class, WTI crude and Brent crude. So WTI crude is traded on the New York Stock Exchange. From the New York Stock Exchange, no, I will not say on the because some of us uses OTC brokers or dealing desk brokers, so they can give you their own price. So you can trade on them. Your order is not exactly executing on the exchange. The Brent is traded on ICE. So mutually, they focus more on WTI and Brent. And the US oil, I think, is grouped under WTI. Every other one is grouped on Brent. Brent is traded on ICE, on intercontinental exchange, on different exchanges across the globe, like Iran exchange, exchange in Australia, London exchange, mental exchange, and all of that. So that is where Brent is intercontinental asset class. But WTI and Brent is the two major group of oil. So your broker may give it a name, maybe US oil is part of it. But the major common symbol of WTI or US oil is CL. That is the major common CL, like C. I don't know, my whiteboard is not showing. I'll write it for you. Where's my whiteboard? Okay, whiteboard. Yeah. So the major this thing is CL. The major symbol of it is CL. Do you understand? So like this, HCl. That is the major symbol of oil. Or when we say US oil, US oil. How you would know, compare their prices. Check the price of the one you are watching. So you can come to the market or to the internet and check the current price of it. Then you know that okay, this price is price of Brent and this price is price of WTI. Do you understand? I have a very
Yes,
bad hand.
yes, I'm following. So I think for the purposes, we should focus on crude oil.
Yeah, crude oil.
I think that's the crude oil, WTI.
Yeah. For example, let me show you something. I think you saw what I wrote on my whiteboard. Here, you see Brent, you see WTI, you look at the price, 69.41. The last time it came to this price was around November last year. Now, Brent is 73.3. Do you understand? So this is the current market price. So you could get it from here more. Then you check your brokerage website or platform, trying to know what they're offering you, whether it is the same price. Like kind of, you see there are different types of Brent oil, but the most important one is this one. And the contract will expire in October, the contract of Brent. Because oil is on contract. When contract expires, it will be renewed. So this top two is the most important one. This top two, WTI, and that's the top one people trade.
Thank you.
Perfect. Now, let's go to risk management. Then we'll go into live trading. Then we'll close, but we may go on break before we do the live trading. I don't know if it's okay like that or whether we should continue. Now, on the risk management, how I want us to study the risk management is this. We want us to practicalize it. So it's not just to give you can read about it, to practicalize it. Some people find it difficult to understand how to manage their risk in trading. So it can cause them issue and like unable to manage their margins. Some people don't even understand the difference between margin and their leverage and their free margin. So it's very important that we understand it. The area I want to focus more on in risk management is on volume. On volume. For example, if you have a $500 account and you're trading oil, most brokers give you 0.1. Check this point I'm opening here. You see 0.1. Here, most brokers give you minimum 0.1 per trade. And this 0.1 will mean $1 per movement. Remember, your account is $500 and you are using $1 per movement or $1 per contract. It means each movement in oil will give you $1 on this 0.1. For us, it's high. If the market goes in your favor, like 10 pips, you will gain $10 immediately, which is very easy. If in a day the market goes in your favor, like 200 pips, that's $200 immediately. So your $500 account becomes $700. But if the market didn't go against in your favor and it goes against 200 pips, that would be minus 200, and the $500 account becomes 300. So now, how do you manage your risk? Let's say you are trading with $500 account. Although I don't subscribe you using $500 to trade oil, to be honest. I like anyone who's into oil to use big money, not 500. If you're using Forex, you can use 500. Let's say you're taking 1% risk or 10% risk on your account. It means if you have an account of $1,000, 10% risk of it is $10. It is $100, which I may call $100 margin. It means anytime you want to place a trade, a portion of that money will be taken and kept aside as margin. This is margin here. Margin. My margin is 0 because there's no open trade. If I open a trade, then my margin will start counting. A portion of your money will be taken and kept aside as margin. And that portion is what is the broker uses to open your trade. For example, let's use this broker as a case study. I don't know your own broker. Let me place a buy on oil. I'm using 0.01. I click buy. Now the order has been executed because each of the movement give me $1. I've been charged $2.20 to the 8 cents per the trade. Now look at the margin. I was given $524.56 to open a trade with just $1 contract. Some brokers can take like $1,000 to open this trade as their margin. So what is holding this trade now, giving me $1 per movement, is $528. And I have free money, which is my free fund, available money to trade, about 99,498. Now, imagine where you have $1,000 account and you're using this provider, and you place a trade with 0.1, and $500 has been taken to place that trade, which is security margin, security amount to holding the trade. What I will have under my free margin here will be 500 left. Remember, my balance is still 1,000. What I will have is 500 left. So if by any chance I'm on a high leverage, leverage give me chance to trade more. I'm on high leverage, I place another buy with the same 0.1 buy. My margin will be 1,000. It means everything, it means under free margin, which is free fund, I will not have any money to trade again. But my balance will still remain here. So what has happened? Let me ask anybody who's very technical about what I'm saying. On this note now, what has happened? Let's assume this is $1,000 account. So I've taken my margin, I've placed a trade with 2 volume, and the $1,000 has been taken as my margin. So here now, my free margin will be 0, totally 0. It means I don't have any fund again, or it will be on negative. But my balance is still there. And the trade is still on -$4 because I just placed it now. It has not gained. Also, what did I just did?
I want to understand, you will hit a margin call.
Sorry?
So by what I understand, you will hit a margin call.
Yeah, your voice is very inside.
Okay. I said by what I understand, you will hit a margin call.
No, I don't have a margin call yet.
Okay.
I can't have a margin call. It means I've used all my money to trade.
Okay.
I've used all my money to trade.
Okay.
And I don't have any available money to place another trade. Assume it's $1,000 account. So for example, now I'm getting $9 here. So if I close, whether it's profit or loss, once I close this trade now, if I close it, let me reduce it. Now, if I close this trade here, the entire of them, or let me just close one. If I close one, look at it, my margin has come back, has reduced to 528. Remember, it was 1,000. So if I close the remaining one, my margin will disappear. It means I don't have any trade again.
Okay.
So most traders don't understand how this thing correlates with each other. It's important. So if you have account of $1,000 you're trading, so you could use 0.1 or 0.2. Now this volume give you 20 cents per movement. This is one of the best way I can explain this management to you. It means 20 cents or 1 cent per movement. So if the price of oil moves to 200 pips in a day, you get $20. Since some of us are risk management traders, if you're a big boy or a risk taker, you just want to make money big, you don't care. That's two people are into this market. People who want to make money big, who can take the risk, they don't care. And people who want to manage their risk. They are two different people. So if I see a guy who want to make money big, you could like ask him to increase the risk or show him how you can be able to make the big money. And some of them don't care, to be honest, because they already know that it's either they take the risk and become rich, or they remain poor while they're managing the risk. So now, if you use 0.02, it gives you 20 cents per movement. Let me know if I can draw it on my dash on my whiteboard. It's very important. After this, we'll talk about risk-reward ratio. Now, on commodities, commodity here will represent a symbol C. So 0.1, 0, let me know if I can use my hand. 0.1, 0.1, we give you $1 per movement. Then on FX, this 0.1 will give you 10 cents. 10 cents per movement. So for example, now, if you have like $100 account or $1,000 account and you're on 10 cents per movement, it's easier for you because your risk is very much low. 10 cents per movement. But in commodities, which I represent with the word C, it gives you $1 per movement. Now, if we are dealing on what we call risk-reward ratio, you know, in risk-reward, when you place a trade, you can put if your stop loss is 50 pips, your take profit should be like, if you're using one ratio trade, your take profit should be like 100 pips, 200 pips, so that in case of any profit, you get more than losses. So if your risk reward is 1:3, and you place a trade on commodities, for example, you place a trade with 0.1, which is $1 per movement. So times 200 pips, P. Then kind of, it will give you $200 profit. But now, if you put it on negative, let's say that is your stop loss, it will give you $200 lost. Imagine you have $1,000 account. It means you are risking 20% per each trade. If you're putting a stop loss on 200, it means each of your trade, you are risking 20%. For me, it may be higher for you, or it may also be higher for me if it's not in line with my risk, because if it's that $1,000 is a very hard earned money, I may not want to lose the money. I may want to, like, control it more. So, but if such risk is okay for you, that's no problem. You want to make more money. But that's how you can control this risk reward. Let me show you, because I know that some people always feel bad when they're not getting big profit. They also feel bad when they lose the money, because risk can never be ruled out in the business. There's always a risk to consider. Now, let's say you are kind of a high risk taker. You use 0.1 to place a trade, then you target and you put your SL, like your stop loss, like 50 pips. Your stop loss like 50 pips. So, and you put your TP like 200 pips. Your TP like 200 pips. So now it means you can have minus $50, and they have plus $200, have plus $200. So in case the market goes against you, you have only minus 50. Technically, you are risking 5% to gain 20%. That's on that. But where you use like 0.5, this area is very important too. If you don't know how to manage your risk, you'll be placing trade unnecessarily without knowing that you have used all your margin to place trade. And if market goes against you, it began to feel troubled that it's not working the way you want. So where you use 0.5, 0.05, sorry, not 0.5, that would be like 50 cents per movement. So now if you if you target like 50 pips stop loss, 50 pips SL, so that will give you $25 minus. Sorry, not $20. $25 minus 25. Then on take profit side, your risk reward is like 200. On take profit side, you use 0.5. I'm using this on commodities, so not on FS. And you target 200 pips. 2p. So now this will give you $200 profit. No, sorry, not $200 profit. This will give you $100 profit. Your profit will be $100 because it's 0.05. It is 0.05. Like that is half of 0.1. So on this note, you are risking about 2.5% of your $1,000, and you're getting 10%. Because $25 loss on a 0.5 will give you, it's about 2.5%. Then and the profit margin, profit return will be like $100, which is about 10%. This is practical way of applying those risk management. Even if you go and read about it, how to apply it is very much important. But now on FS, let me know if I have a question, because we are going on break in the next 2 minutes. But we may give like maybe 1 minute to 2 minutes to answer questions. But on FS, for example, on FS, one lot, sorry, one lot is equals to $1. This is FS. But on commodities C, one lot is equals to $10. But 0.5 lot equals to 50 cents on a on commodities 0.5 equals to $5. Do you understand? Because some people usually ask us, what volume should I use? How do I place it? How do I do this? When you don't know the value of, or in returns of, the value in returns of your losses, it can just start mismanaging it. So in a situation where you have used like 2 loss size, like you buy, maybe you place a trade on commodities with 0.1. You place trade on forex with 1. So you're already using about $1. You're already using about $2 to trade. Like each movement in FS give you $1, and each movement on commodities give you $1. And if you're having like $500 balance, it means you're taking a very much higher risk, not even medium risk, as you're placing your trade. But of course, if you're a high risk taker and you want to make big amount of profit, it will be good for you. Remember, in trading, we are not speculating our analysis. We have to do a sound analysis to make sure that we have high chance of getting all our analysis than losing the analysis. Let me take a question before we go on break. Like, I also want to show you how to manage your risk on price movement. Do you have any question? Because there's another risk management on price movement, how you can be able to manage your risk on a price movement. Like from the chart here, I will show you how easy you can also manage your risk on price movement. I've shown you risk management on lot size. If you work more on it, you can be able to expand your knowledge on it. But on price movement, there's also a risk management on price movement. While I'm taking your question, I can take my time and explain it to you. Risk management on price movement. Any question? Okay. So while you may be typing your question, I'll be able to answer you. Or if you want to ask me the question. Now, talking about price movement on risk management, some of the things you need to consider is this. One, try to know the price range, the average price of that particular instrument, because risk management on price movement, for me, I define it as the area of entry, how you are able to place your trade according to the price movement. So where you can have the capacity or the more opportunity to gain more than losing. Placing the trade on a right spot, or what you call sniper entry, is also effective way of managing risk. Because if you're a high risk trader, you shouldn't just place trade on any certain price. Even if you're a medium risk trader, the price you place your trade matters a lot. One, how to effectively manage your risk on price movement is that buy and sell at the edge. Let's use WTI crude, for example, and the US JPY. You see this market now, anybody buying oil at this price is potentially buying at a lesser price. There's somebody who bought oil at 78.21. Buying low helps you to manage your risk, and selling high helps you to manage your risk. How do I know when to buy low and sell high? You can use support and resistance level to spot at low price and high price. Then also use long-term candlestick like daily chart to spot at the entry price. For example, USD JPY buying at this price when it has come down extremely low to 1.483. Somebody may ask me, how do I know is low? Look at where it came down from above 1.459 and to 1.43. Is showing you that this area is actually or potentially a support zone. If you are buying here, you have a chance of making more profit than when you have bought at 1.54. It can be difficult for you to use a short time frame to identify potential entry of buying and selling. So let's say you buy at this price now, you have chance of making more profit because you are buying at a lower price, even if your risk is high, but the price you are buying is also good. Then when you're buying at a higher price when you are buying at a higher price and with a high volume of risk, it's not a very good risk management system. Somebody say, how do I calculate pips on the price movement? The pips is this. For example, watch this particular market, 467, 467. As you can see, the price is changing, 468. So each price that change means pip, 466. If the price keep going up from 466, 468, 469, 470, 471, 472, then that means the price is going up, and each of them is the peak movement. As you can see now, it has gotten to 470, so it can hit again for 471. So each of them is a peak movement. So if you buy here at 1.43466 and you set up your take profit at 1.44466, that's potentially 100 pips. So let's, for example, you are using one lot and place it on currency, you're going to gain $100. But your capital, what I explained about margin matters a lot. If you don't have enough margin, the trade will not be open. Any question again, I want us to go on break. Let's go on 30 minutes break. I've used 7 minutes of your break anyway. So let's go on break and come back exactly by 12:30. Then we'll discuss further and we'll place our first trade. By 4 o'clock, trade is going to be open. I will make sure that I want you to make sure that to trade at this market with us. Even if you want to set up a brokerage account, it doesn't take time. You can set up an account within 10 minutes and able to trade the oil market. Any question? I want to take a question, maybe one or two questions. Exactly by
there are no
12:10.
questions. I will just thank you for.
Go ahead.
I was saying no questions. We just thank you for the good explanations. Yeah, it's worth it. You know, it's all worth it.
Oh, okay.
Thank you.
Okay. So by 12:30, we're coming back on live trading. Then we can pick a trade and place the trade. Exactly by 12:30, we'll do live analysis and place a trade. Then we expect again by 4 o'clock to trade oil market. So that will be where we end for today. We have discussed about how to trade non-farm payroll. We have discussed about how commodity market was and how to trade it. We are currently working on risk management. In case we go on break and you discover anything, you can let us know as soon as possible. Immediately come back on break. Then we'll do our live analysis and place our trade and see how much we gain. Believe me, you make a lot of profit because there are potential opportunities coming up. See you exactly by 12:30